On in, you veterans know what it is. It is the 30 Wall Street vet about to talk to you about the AI wars going on between the US and China, applying my multi-decades of experience having being paid stock picks by firms owned by Jim Cramer. You know, Jim Cramer, the one who gives you stock picks, he used to pay me for stock picks. And I give them to you now for free, having retired in 2008. 17 years ago, almost. At the end of this year, it'll be a 17-year anniversary of my retirement at age 38 from being a Wall Street consultant, known for my technology knowledge, for my guidance through the internet bubble, for my guidance through the internet crash, and more recently, my guidance through the AI movement. I'm not going to call it a bubble, but we're starting to see signs of the bubble. Where are the safe places to put your money in the AI revolution now that so many AI stocks have gone berserk? We are going to talk about it as soon as my veterans retweet the invitation, get enough people in here, because we have to have a big enough studio audience. We want enough live people. I could be out on the beach right now at Miami Beach from my penthouse apartment, or I could be here donating my 2 hours a week to you. And all I ask in return is for you veterans to share the invitation that I put out on X and StockTwits. Not much to ask. No sponsorships, no advertisements, no subscriptions, no tricks, no strings attached, except spreading the word to let them know that somebody like me is here to teach you the difference between the scam, I believe, my opinion, First Amendment right, scam that our college systems are, that CNBC is, in terms of helping you become a millionaire. And I know this firsthand because I succumbed to the BS too. I lost money at the beginning of my career as a stock picker. First 3 years in a row. Lost, lost, lost. Came out of college, Northeastern University, one of the top 50 in the country, with honors on a college scholarship. Didn't know crap. Because colleges don't teach you crap that you need for the real world. Luckily, my mentor pulled me out of the mud, and here I am. All right, finally. See, all that rambling that y'all got, you non-veterans, it's because I was waiting. I was waiting for the veterans. I was waiting for you guys to do your part, to share the live. And now that we finally have the studio audience that I think we all deserve, I can say those magic words. It's Friday. It's Money Mark. It's Stock Talk Live. We have another big show. Seems like week after week, there's always big news to share. Not always. Sometimes more than others. I'm here to keep it a buck. I'm here to tell you the truth. If there's nothing to talk about, we'll just do Q&A. But if there's something to talk about, we're going to talk about it. I'm going to give you everything that I learned this week in the course of doing my personal work. Because even though I'm retired, I still manage my own portfolio, my family's money, building villages, donating money to underprivileged kids. So, what kind of person would I be if I didn't share with you what was shared to me by my mentor, a mentor who is trained by legends themselves? Okay, enough of the speeches. Let's get into it for you guys. First of all, we didn't send this. Let's get the StockTwits out there. Here I am yelling at y'all, and I didn't get the StockTwits invite out. There it is. And here is our official high-tech introduction page. We're going to have Money Macro very quickly today, by the way, because we got to get into the picks and your Q&A. And of course, as always, I have to put this CYA out there. Okay? Please read it. Make sure somebody reads it to you if you haven't read it or can't read. All right? And understand that just to CYA, I can do anything I want with my stocks at any time whatsoever that you are not encouraged to do anything based on anything I say, based on any of my opinions. In fact, treat this as much of a clown show as I think CNBC is, and those college courses that don't teach you 1/10 of what you need to know about the real way to make millions. Do you know how I know, by the way? Besides my experience in having gone through it? If colleges teach you how to be a millionaire, why isn't everybody that comes out of college become a millionaire? In fact, why do we have a debt crisis in colleges? I'm not going to talk about that. We're going to talk about stocks, but think about it. Think about it. These are businesses. CNBC's a business. Colleges are businesses. They're here to get your money. And so they're going to sell you on a dream. They won't deliver it. They may not deliver it, but they'll certainly sell you on it, and they will take your money or your eyeballs, waste your time to watch advertising. I don't have to go through this in the description of my video. By the way, for you newbies out there, you are going to hear things you don't hear from anybody else. I describe things in ways that other people don't. Why? Because I'm a 30-year veteran being a consultant to Wall Street. Forget about the Wall Street reports that you see out there. I used to be the person that they paid for my expertise that went into those reports. I have respect for some of those guys out there, but en masse, if they were really that good, why are they working for somebody else? Why are they working for Morgan Stanley, JP Morgan, former customers of mine, instead of out here making millions and just giving this time away? 10,000 clowns out there pretending to be something they're not. All my information is in the description of this video. Again, no strings attached. This is me informing you guys that there are only so many people you should listen to out there. I'm not saying I'm the only one, by the way, but you need to find these people who will give you, one, their real name, which is included out there. I give it to you. Mark Gomes Stocks. There it is, right? Here's my Twitter. We got over 7,500 followers now. I don't do any internet marketing, by the way. I don't do any marketing except this right here, basically. Here are my credentials. That's number 2. And number 3, a real-time tracker of performance. Here you go. 48% nearly, dating back to 2014 in my real-time tracker. You see here, no losing picks, going back to, look at that, the birth of my daughter back in May of last year. Let's add this all up cleanly. Averaging 123% per pick for the last 17 months. All right, enough bragging. Let's get into it. Let's see what we got going on now. The Fear Greed Index. Let's see what's happening in the wake of what's happening in the markets today. Boom. Ooh, look at that. It's starting to get juicy. People are getting scared. We got fear. Fear is driving the U.S. market. We're going to show you all the charts in a second. Okay, this is, all else being equal, this is good news. Okay, we want fear in the market. When we get up to this high territory of extreme greed, right? That was back in July 3rd. This is when the market starts to go sideways or down. It becomes more difficult to make money in that environment. And as you can see, the market is, let's go right to the charts, in fact, pulling back quite a bit off of some technical levels, off of our yellow alert levels, right? We started to show some bubble territory, but now we're seeing a pullback. Will we continue into bubble territory? I don't know. I'm not God to know, and neither is anybody else. So don't go trusting any of those other clowns out there unless they've proven themselves to you through up and down markets. Up and down markets, because frankly, in a market like this, anybody can give you good picks. I can have my 17-month-old daughter just poke her finger at the Wall Street Journal and guarantee that portfolio will make money. Okay, so be careful, because those same people that are putting you into picks that go up today are the same ones that'll leave you stranded in them tomorrow when the market tanks. And inevitably it will. We always have big corrections in the market. So be careful of that. Let's see, the 2-year yield, I wouldn't be surprised. I was going to predict it. Down. That's good, all things being equal. As long as the economy isn't falling apart, lower interest rates are positive for equities. Okay? And real estate for that matter. But we're talking about stocks here. Okay, that's that. By the way, before we get started, once again, I do this out of the goodness of my heart because my mentor did this for me. I don't ask for anything except for you to spread the word. One way you can do that is to give me the thumbs up. You don't hit the subscribe button. That does not impact the algorithm as much as giving me a thumbs up or putting a comment in the chat. And among those comments, keep it clean, right? We don't deal with trolls. I will delete you immediately. And by the way, this is my show, not yours, so don't pimp your pics in my chat. I will delete them. I will delete you from my show immediately. This is a professional show. But if you have a question about anything that I discuss on my shows, put a question mark at the beginning and the end of your comment. That way it's easy for me to see as I'm looking down the list here, and we will answer as many as possible until 3:55 p.m. Eastern time. All right, so let's get into it. What do we have? We've got Xi and Trump at war with regard to, let's bring up the market chart right here. Rare earths, okay? And rare earths are becoming increasingly important in this world. AI becoming increasingly important in this world. So what's happening? The U.S. doesn't want the best AI chips going to China. China doesn't want the best rare earths coming to America. Each country has its strengths in this AI war. Okay, and each one is trying to hoard them. And so you started to see companies like MP Materials. Look at this. Whoa, wait a minute. I thought the market was down heavy today. I thought the market was tanking today. I thought the NASDAQ was down 2% today. It is, but not these rare earths. MP up 12%. Why? Because this is becoming of increasing strategic importance to the U.S. Because China is starting to say, nah, I think we'll keep ours. And so we have to make our own. We have to start producing more of our own for many reasons. They go into EVs. That's the future. AI. That's the future. Okay? So all of this is driven by what is the future of what's going to make the U.S. or China the winners of the next wave of the everlasting economic war. All right. So what are some of the other names that we should be looking at in this market with regard to rare earths? I know this is a departure from typical tech, right? My strength, and we will talk about tech in this show, but I want to make sure you guys are informed of the names that I'm looking at, and I will even at times tell you which ones I'm personally buying or selling on a given day, right? On top of the official portfolio, which is really the gold standard for what I do. But I want to tell you everything, not just the official portfolio. So where do we start? We got MP Materials. Now, when MP took off all those months ago, I told you guys don't chase that one. All right? Because there is a better one to put your money into. You could put your money into MP, but I always prefer to put my money into better than good, right? Good is good. Great is better. Best is what we're always looking for. And in that regard, you see MP traded in the US, that 2-letter ticker symbol, right? Highly liquid, etc., etc. That's not where the best money is made, y'all. The best money is made in the names that people maybe don't know about or can't buy. All right. And there's a lot of apps out there, Webull, Robinhood, you name it, that won't allow you to buy some of the best, juiciest names. A stock isn't just a number that goes up if more people buy it. No, it's actually a fraction of a company that has a defined value. Only God knows what that value is, but it is defined. It is limited. It's not infinite. Okay? This is important for you to know because Wall Street in times like this will take the company with the highest valuation and say, well, this one's trading for 50 times revenue, so this one should too. That's BS. And you know it. It's common sense. The number one player in a space deserves the best valuation, right? Is everybody in the space the best player? No, only one. So everybody else in the space should get a lower valuation. And yet Wall Street wants to sell people on the concept that whatever the most valuable company is in the space, everybody else should get the same valuation. In fact, I'm going to talk about MOB in just a few minutes. I'm going to make sure that I put that down on my notebook, but it was in the invite because I spoke to the CEO of MOB today. Among other times, I've spoken to him in the past as well. I'll tell you what he had to say. MP, right? What do I like better than MP? In fact, I'm buying more of today or was until I got on this show, Aclara Resources. Okay, this is a name that has similarities to MP. They are, in fact, you can actually go to AI. This is one thing that I teach you guys as well, because there's a lot of questions that you folks ask of me that AI can help you with. You can go to Grok, Perplexity, ChatGPT, which we all know, but there's many AIs, and in fact, I ask multiple AIs. You see ChatGPT there, you see Grok there. I actually pay Perplexity for their services. I was paying Perplexity, then I switched to Grok, then I switched back to Perplexity because Grok has too many hallucinations. If you don't know what that means, ask Grok and it will tell you that it hallucinates. Mix stuff up, in other words, okay? But when it comes to facts, it's pretty good. In other words, for this one, I'm asking for a compare and contrast of companies with the ticker symbols MP and ARAAF in light of the recent rare earth wars between the US and China. And it gives you this answer right here, all right? I'll give you the short answer, and I don't even know if it gave the right answer there. You know why? Because I put the wrong ticker symbol, didn't I? No, I didn't. RAAFF. You see, this is what Grok does. I'm going to ask again. Not. This is crazy, right? You have to be careful what you're getting out of this AI. And you'll get the answer, okay? And what you'll find is ARAAF actually produces non-radioactive material. It's also in North America in terms of exposure, right? And so what you're dealing with here is a company that doesn't have the name recognition of MP Materials, who's gotten all the shine, all the CNBC attention, but in reality, Aclara Resources, look at this. It's having a hard time with this. Aclara Resources, dummy. Let's see if that clears it up. But you can keep asking it until it gets it right. There we go. See? Boom. I guess you have to call it a dummy to get the right answer out of it. It's still making a mistake here. But it'll give you the rundown of what's going on here, what Aclara produces. Spoiler alert, similar to MP, okay? I am a buyer of Aclara, not MP. I've got professionals, people who actually cover the mining space for multiple decades. Me, no. I'm not going to come out here and claim to be some expert on rare earths, some expert on copper, some expert on any of those things if I'm not an expert, and I'm not. But I do know experts. I do know people who have been involved in these spaces for years, and they are telling me that this stock right here remains undervalued. And you know what's interesting is, as much as it's gone up of late, when you look at what's happened to an MP, right, going from 10 to 80, you look at, there's a number of other names out there. Was it Lightpath? Gone from a 1 to 10, okay? You don't see that same level of excitement in an ARAAF. Although it has gone up quite a bit, it's still only a $2 stock. The real pricing was somewhere around 50 cents, so it's really only 5x from, you know, this area, maybe 7. The rest of them up 10x. So there's still room to move as far as that goes when you think about it that way. But in reality, I'm not going to get into the valuation, but trust me, I spoke to my professionals about this as late as noon today, and they were like, no, this name is still too cheap. It's still underknown. Part of the reason why, that little F at the end of the ticker symbol makes it a name that people are like, I don't know, it's a foreign name. Oh, I can't buy it in Robinhood, what have you. It's not as liquid, blah, blah, blah. Great. Great. That's what we want. I don't want to buy Apple. I don't buy Apple. I don't buy Google for the most part, unless I see a real big bargain there. And it's tough because you got 50 Wall Street professionals, right? Just the brokers alone covering Apple and Google. Another 250 institutions looking at these names every single day. And you got to compete against that. But a name like Aclara, you don't have to have that kind of competition. So Lightpath is also of interest, right? I'm not buying any of these names, by the way, except for ARAAF at this moment because of the valuations. I want to make sure I'm buying at a great price. Okay, none of these are official picks though, but there is one. There is one name on this list that is an official pick. We'll get to it in a second. What else? U.S. antimony. This one still seems too cheap. Okay, I know you see how much it's gone up. This has been a major winner for those who got in at these lower levels. I mean, good Lord, 30, 20 cents to 12 bucks. My experts are telling me this still has room to move. But be careful about chasing. Be careful. I'm not buying any right now. I'd like to see a little pullback because, wow, this is a name that just the beginning of 1 month ago. 1 month ago today, this was a $4 stock. Now it's almost tripled in a month. So be careful, right? Because we're not here to be involved in a name that everybody else is excited about. YOLO, FOMO. No, 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 no. We're here to buy discounts. We're here to buy names that people aren't talking about, that people are afraid of. Be greedy when others are fearful, fearful when others are greedy, okay? But I want you to be aware of these names because you want to buy some of these names on dip. U.S. antimony, I think, on a dip is a buy. ARAAF, definitely, I think, is a buy in proper quantities. ATXRF, probably not done yet. I gave y'all this one in the lower ones. And look at that nice chart unfolding here. Okay? Boom. It's been working nice. Chile is known as the Saudi Arabia of copper. Enough said, right? Copper becoming increasingly important. Transport of electricity obviously important for AI. Lots more copper being in demand. The stock has been doing great. This is an exploration company that has a number of drills and an increasing number of drills based on my sources feeding me information about what's going on here. Not insider information, not illegal information, legal information, okay? And who's supplying ththose drills for them to start figuring out how much copper they can get out of that Chilean ground? Geodrill. GEO on the Toronto, that's why it's GEOT.TO, but in the US, it doesn't come up on my chart. The system doesn't allow this particular symbol. I got to request it, see if they'll put it on here. But here's the risk reward chart. For those of you who've been following me, you already know. You go to this article right here, you will learn. This is the instruction manual for everything that I do here, as well as this video right here. This is the instruction manual for everything I do here. It'll take you a total of 1 hour to go through all this to learn the proper way to do all this, okay? I won't teach you how to value these companies. That's my job to you. I can't teach you that in anything less than 10 years, and frankly, I don't have time to do that. 10 years. You can do that on your own. But you can tune in every week, and I'll give you these risk-reward lines. You'll be able to decipher them very easily. It's not hard to understand that green means go and red means stop, and everything in between is something in between, okay? And here you go with Geodrill, GEODF. Whoa, that should say GEOD. When did that change? I know that was like that. In the EUS, this is one of my largest positions. These guys are the ones that when somebody needs to pull something out of the ground, rare earths, copper, lithium, you name it, these are the guys that they call and say, we need your drills. These guys have been getting so many calls that they have to buy more drills. More drills, more drills, more drills. The CEO told me years ago, he goes, Mark, around the time we get up to 100 drills, this company will probably be growing so slowly that maybe we'll only add 5 drills a year, and that doesn't excite me. At that point, I'll probably sell the company. He owns 40% of the company, by the way. Dave Harper, phenomenal operator, great guy, by the way, okay? I've known him for years. Well, guess what? They went from 80 drills to 100 drills, almost like that. I think they're going to be at 110 drills, almost like that, because of the demand that's going on out there for all these drills. Last I heard, ATRXF was looking for ATRXF. Come on. Well, ATXRF. You see, Grok isn't the only one with dyslexia today. No offense to those that have dyslexia, by the way. Just, last I heard, they had 7 drills. Well, last I heard, they have 11 drills now. Okay, and just a few months later. So Atex Resources getting a lot more drills. That means Geodrill, GEODF getting a lot more business. All right. So don't worry about the seasonality of the business, because if you have a seasonal quarter, then it's going to be compared to a seasonal quarter. What I look for is I look for where you are in the red and the green, right? If a company is operating on 10 cylinders, the company should be at the red line. It should be all the way at the top of the red line if they are operating on 10 cylinders. Who's operating on 10 cylinders? Drone Shield. Went straight through the top line. Notice I didn't turn them colored. I only turn them colored once I'm sure of valuation. Didn't do that in this case, but I did in the case of Kraken, and they're operating on all 10 cylinders. They went straight through the red line. This is what happens. Sometimes a company's operating on more than 10 cylinders. You saw TSSI break right through my red line. This is happening with increasing frequency in this AI environment, okay? But make no mistake, I feel more comfortable if we just stick to the rules, right? And say, if the company's operating on 10, it should be at the red line, and if it gets to the red line, I am selling most of my position, maybe all of it. This company is totally operating on 10, but it's trading down here. This is, by the way, more like 5, because this is a log scale. On an arithmetic scale, you get a better view of where on the scale of 1 to 10 it's actually operating on. As soon as the chart allows me to do it, there we go. Boom. On an arithmetic, the only time you use an arithmetic scale is to see this, right? Where it is between the low and the high line. About a 5. We go back to the logarithmic, and you can still see the prices between 2 and roughly 6. If you got between 2 and 6 as your low and your high, then 344 is basically halfway between one and the other. And yet this company is operating on all 10 cylinders, so it should be up here closer to the $5 or $6 range in my estimation, okay, based on the numbers that I did, based on the teachings that my mentors, my Wall Street legend mentors, taught to me. All right. And I bring that to you. So there's your chart right there. You could take a picture of it, whatever. I think that's all of the rare earth plays that I like right now. US Antimony, Lightpath, ARAAF, Geodrill, ATXRF. By the way, Lightpath, just so you know, even though it's a little too high for me to be chasing at these levels, this is a company that germanium is a rare earth that's very important right now. This is a metal that Lightpath can circumvent. Their product uses something that they license from the US Navy that circumvents the need for that rare earth. And therefore, if there is a shortage of that rare earth, guess what? The price will go up, number 1. The availability will be limited, number 2. And the demand for Lightpath's products will go up, number 3, because it will be a cheaper, more available alternative. And that's why the stock is run. Sorry I didn't catch it earlier. Can't catch them all. But anyways, that takes care of that. All right, let's get into some real AI, right? Not just those derivatives. Gatekeeper just keeps on humming. I gave a video presentation on, was it Tuesday? It was a special. This is why you should hit the subscribe button and the notification bell, by the way. I don't encourage you to do it. I only want the thumbs up. I only want the comments in the chat, because that spreads the word. The notification bell and the subscribe button is just for you. Okay? But if you don't hit that, you will not find out when I do a surprise live. And I did do a surprise live this week to talk about this new Gatekeeper deal, to talk about AEHR's earnings. All right? And so I'm not going to get into it too much here, but there is some additional information that has come up. By the way, for those who missed, I'll give you the quick and dirty. Alstom is the second, don't do that, the second largest train manufacturer on the planet. They make 4,300 trains per year. Next year, it might be 5,000, because they're adding capacity in France and Germany due to unprecedented demand for multiple reasons. 1, the world's going EV, right? 2, the world is moving to AI monitoring on these trains and outside these trains, buses, what have you. With that AI monitoring within the vehicles, You can start to search for criminals, search for criminal activity, make sure that these buses and trains are safer. If you've been in the train system in St. Louis or New York recently, it's not a safe place. People would rather walk in some of these cities than take their chances in transit. People being pushed onto the rails at random. People getting killed, robbed, beat up. We need a better solution. You just can't put cops on every single train car, on every single bus, on every single school bus. So what do? You put cameras that monitor, they're basically data collectors that monitor what's going on, right? And you can have a human monitoring, let's say, 10 school buses all at once. Just give them 10 monitors with all the camera feeds coming in from those buses, and a human can do it. But guess what? An AI software program can monitor hundreds, thousands. In fact, Gatekeeper has up to 3,700. It was only 300 last year. It was only 3,000 over the summer, which was just a few months ago. Now it's 3,700 monitoring contracts with their AI monitoring what's going on here. So now we have greater safety. If there is a fight on the bus, it can recognize that. Right? The AI can recognize that something's going wrong here. The people are not seated, behaving. The kids are not seated, behaving. Something's going on inside the bus that's not right. Okay? It can monitor all kinds of things with regard to that. But also outside the bus. When the bus stops and the stop arm goes out, I want my kid to be safe crossing the road. Kids are getting killed because people just fly right past the stop arm. These buses are now automatically giving out tickets using AI to people that are violating those rules. City of New York making $250 million a year already on this kind of technology. Okay, so it's not just an investment, it's actually a P&L center. It's a profit center. It's bringing revenue into the cities, which is critical in these days of lower tax revenue, right? So now you've got a company like Alstom that dishes out by next year about 5,000 trains a year, creating an OEM relationship. It took 2 years for this relationship to be inked. That's how much negotiation and discussion had to go back and forth to make this happen. All right? And if this relationship gets to the point, it's not there yet, it just got started. It just got started and already a $7.5 million contract. That's the first contract under this agreement. Okay? If we get to the point where every Alstom train gets a Gatekeeper system on it, Gatekeeper gets $30,000 per train, my friends. 5,000 trains, that's $150 million per year. They only make $30 million per year now. And this is just one train manufacturer. In fact, the number 2 train manufacturer, never mind number 1 and number 3, which probably add up to a similar value as this one. All right. Go watch my midweek show for more details on that. Since that time, a new investor presentation. What does that mean? What does it usually mean when a company releases a new investor presentation? They're probably getting ready. They're probably getting ready to talk to more investors. And we've seen it. We've seen more institutions coming in, buying shares of this company because of what's going on, because of the mandates. Go watch my old videos. I don't want to repeat it all for you veterans out there that have been watching the show week after week. But as you can see here, we've got a great presentation. 25% market share. These guys have actually been winning more than 25% of the deals from what I've seen of late. But a 25% market share represents $1.2 billion over a technology replacement cycle, which is 6 to 10 years. So at a minimum, 25% market share represents $120 million per year. Well, that's funny. Right? Because you might say, well, Mark, they're only making $30 million a year. Something's wrong there. Yeah, something's wrong there. What's between your ears is wrong, because you must not have taken notes last week when I told you that Gatekeeper, just by chance, what a coincidence, if you add up the deals that they have signed in the last 5 months, never mind the last 5 years, the past is the past. The future is what stocks are made of. 5 months, the most recent 5 months, they have signed over $50 million of contracts. Over 50 million. Let's just call it 50, right? 50 in 5 months, that's what? 10 million per month. How many months in a year? 12. What's 12 times 10 million? 120 million. Oh, it all makes sense. It all makes sense. So now what this means is that we can expect, based on the deals that we're seeing, based on the demand that is showing up in the marketplace, that revenue at Gatekeeper is going to start skyrocketing over the next couple of years. And in fact, some of these deals that they're getting pushed out several years. We now have visibility into revenue for Gatekeeper to like 2030 so far. People are signing up for product from Gatekeeper multiple years out in advance. That's how much demand is coming in. And don't worry, Gatekeeper can handle it. I've spoken to the CEO several times. All right. He's prepared for it. He knows what it takes to fulfill $120 million worth of deals. Right. It's more hiring and they're doing more hiring. Simple. All right. The rest of the presentation you can check out yourself. You can see the growth and what's going on here. Oh, man. 4,500 MDCs installed. Okay. 3,800. My bad. It was 3,700. Now it's 3,800. Boom. Growth, growth, growth. And look, you can look over the rest. Okay. But suffice it to say, we should expect, based on the recent dealings that they had, the CEO had to sell shares as part of a divorce. Wifey, what a dummy you are. What a dummy you are, wifey. You didn't take the shares. You wanted the cash. You forced your husband to sell shares of his stock, y'all stock, because you were married, right? And you wanted the cash. You should have held it. You should have held it. Stupid. But in the wake of that, the brokerage firms that were involved in enabling that transaction, I would be very surprised if we don't start seeing Wall Street coverage in this stock pretty soon. It's usually a 6-week cycle after a transaction like that you start seeing some coverage. We're a few weeks into it, so maybe by the end of the month we're going to see a Wall Street report on this company. And you know how it goes. The initiation reports are always a buy rating and always with a higher price target, right? So stay tuned. All right, that's it. That's the update summary on that. By the way, what I did here was just ask ChatGPT. I'm not asking Grok. It'll make something up. ChatGPT is pretty good when it comes to these kinds of details. And look at the presentation. Beautiful. What I asked it is, in light of this new OEM relationship with Alstom, what additional deals can we expect Gatekeeper to win in the coming months? And you see New Jersey, MTA. I've already talked about MTA. That's New York City. They're already in Long Island. Okay? But Metro North, future options, additional cars, right? New Jersey makes sense, by the way. What's between Philadelphia, Gatekeeper's largest customer in past, who has been a huge proponent of what they do, instrumental in them winning New York City, by the way. Philadelphia told New York City, this is the company you want to deal with. Okay? And so New York said, thank you, Philadelphia. We're going to do that. They did it. Who's in between New York and Philadelphia? And what do you think they're going to do? New Jersey, right? And then some others right there. So that's great to see. Boom. If you have any questions, again, put it in the chat and we'll move on from there. We will save these notes. 150 million per year if Alstom goes full. We talked about that, so that's out the notebook. Cool. All right, I'm going to go through the rest of these tabs. Then I'm going to go through the rest of my notebook. By the way, dummies, if you don't have these two things, you have not made the most important investments that you can make. A $1 pen, a $1 notebook. The brain is not made for memory. You will forget 99.999, literally, look it up, of everything that happens to you on this planet Earth while you are alive. It's a fact. You will forget 99.999 unless you've got photographic memory, which very few do. You can ask AI what percent of people have photographic memory. Okay? So you need something to help you with memory. Reminders, notes, etc. Get yourself a notebook and pen. I need it. I use it. You should too. How about that? I said no advertisements. Advertisements for pens and notebooks. AEHR. Okay. They came out with their earnings. We talked about it on the show. What did I tell you? As late as Monday at 1 p.m. when I do my Spaces show. By the way, follow me on Twitter, X, if you want to get notified when I am appearing on the Wolf Financial Spaces. Okay, Wolf Financial with, I don't know, like probably 600,000 followers at this point. I am a guest on their show on a near weekly basis, Mondays at 1. All right, and on this show right here, I warned you that things were getting frothy for AEHR. And on that Spaces show, I warned you that things were getting frothy for AEHR. We're going to talk in a minute about what the reset is, because this was nearly 35 and now it's under 25. So stay tuned. We're going to talk about what that should mean for our investment decisions. But I just want to show you exactly why it was so easy to make the call that I did. Because I didn't know what the quarter was going to be. Nobody does. The only people who know by the way, if anybody tells you they know what the quarter is going to be, they're either dealing with insider information and should be in jail, or they're lying to you to get your clicks and your eyeballs and your follows. 10,000 clowns out there that don't have the proper credentials to do what I and some others do. Okay, I'm not the only person out there that you need to follow, but be careful. You want to find those needles in the hay. Hey, I want to find them too. If you find somebody that's got my credentials, let me know. I want to follow them. I follow people too. Okay, that's partly how I get my ideas. Make money, blah, blah, blah. All right, but here's what it is. Remember what I said earlier? These lines represent the range of outcomes for the company. And when the company is operating on all 10 cylinders, it belongs at the 10 line up here where it is red. When it is operating on one cylinder, it belongs down here at the green. And the reason we buy at the green is that as long as the company is a good one, it will find a way out of the mess. The car isn't running properly. We're going to send it to the shop. We're going to get it fixed, and it's going to start running on all 10 cylinders again. It might take a quarter, 2 quarters, a year, 2 years, but it will happen. So you can blindly buy these companies. Look at the green line, at the green line, at the green line. Look what happens. Oh yeah, sometimes it dips lower. Mark, I bought it at the green line at 8 and it dropped down to 650. Stupid. And then you sold, what? Because something cheap got cheaper? Because something on sale went on sale for a higher discount? Because the chart broke. Now you're broke too. Technical analysis does not produce billionaires. Look it up. Warren Buffett was the richest man on the planet. He did not do technical analysis at all. I do some of it, by the way, because so many people do. It's smart, right? But he became the richest man ever without that at all. That should tell you something. It's fundamentals that get you the millions and then ultimately the billions. And these lines represent the fundamentals. It looks easy to draw, but it's not. Because where would you have put these lines back here? You see that? That makes no sense. These lines make no sense in the context of this whole thing, because shouldn't this line be here, Mark? No. No, it belonged up here. Because that's the math that I was taught by experts over the course of 30 years. Okay, so those other 10,000 clowns can't draw these lines. Sometimes these lines will work if you just draw them. But you don't know if they will or not unless you've actually done the research, unless you've actually applied 30 years of expertise to it. All right, enough speech. Let's get to the final analysis of AEHR. The quarter. To me, who cares? Okay, these guys went AI goldmine, and now they're getting customers, they're getting orders. It's clear that that's going to continue, but it's just getting started. This is only a few months ago that I declared they were AI goldmine. This was May. It's now October. That's 5 months. Listen, y'all, in the real world, I know in the dream world, right? We sit there and go, geez, AEHR sells AI testing equipment. Everybody must want it, so their quarter is probably going to be great. No, bro. These companies have to hear of AEHR. research AEHR, research AEHR's competitors, what they offer, how it compares to what they need, figure out what they're using now, whether or not they should replace what they have now, depreciation amortization schedules, technology roadmaps, send out an RFI, send out an RFP, do testing on the machines themselves in a controlled environment to see if it actually works the way they think it's going to work. Do that for months, and then negotiate a deal for months, and eventually 9, 12, sometimes 24, 36 months later, you get a deal. This has been going on for a while now, so you're seeing these deals already trickling in. There is a sense of urgency, so these companies accelerate what goes on. But I just wanted to give you a flavor of what happens in the real world. The company that I worked for that made me an expert on technology, AMR Research and IDC, that's what we do. We guide companies through that process, okay? It doesn't just happen like that. That's why what I call the wait time, remember, read my article, watch my video, right? These right here, to help help you learn the difference between a great find, a wait time, and a gold mine, because these right here will do this to you. Wait time stocks will F you, okay? But no, this is not a wait time stock. This is a gold mine stock. It's proven. The technology experts that I've talked to, unquestionably, this is a solution that's needed. They just need to go through that process I walked you through and start winning more and more of those deals. And that is happening. It just doesn't show up in the quarterly results, because what shows up in the quarterly results? Actual sales. But that's the last part of the whole process. So the company could already be operating on all 10 cylinders before it shows up in the numbers. Bottom line, the company is not operating on 10 cylinders yet, in my opinion, okay? But they are operating on a lot more than they were operating here. They were, make no mistake, after EVs fell out of bed, Tesla fell out of bed, AEHR fell out of bed with them, Wolfspeed, the bankruptcy, of course the stock went cuckoo after that. Who warned you about that a little bit? Hey, but they started doing better. They are doing better. I would say they're operating, I've said, roughly 5 cylinders. But if you look at the chart, it had moved way up the risk reward channel. I was like, you know what? This is way too much, way too fast. They are not close enough to operating on all cylinders to justify all this movement from 6 to nearly 36. And how quickly? 6 months? From 6 to 36 in 6 months. Bro, if you didn't take some profits off the table, you're dumb. I'm sorry, you're dumb. Me, I took almost everything off the table because I thought it had run too much too fast. Okay? I love this company. I love the CEO. I love their prospects. I love their future. And in fact, I have started rebuilding my position, okay, on this dip, primarily by selling puts. Don't ask me what that is. Ask AI. All right? I sell puts. That automatically gets me in the stock at a lower price or makes me a profit on those sold puts, right? And boom, that's how we're going to do that. And I'm going to continue to sell more puts if the stock continues going lower, because now we are back into a territory that's more commensurate with how the company is operating in terms of how many cylinders we're working with. Okay? And yeah, I know you have to tune into the show or know some other experts that can tell you how many cylinders is this company operating on. But it doesn't take a rocket scientist to look at the results they just told us and say, whoa, those earnings don't look like 10 cylinders. It's not. Okay? And again, those numbers are in the past, and the great numbers are in the future. They're somewhere in between. All right? You can ask more questions on that in the Q&A. Remember, this is all unrehearsed, so, where are we here? Oh, yeah. Boom. So that's AEHR. By the way, real quick news. VirTra, VTSI, $4.8 million deal. This deal actually, what's great about VTSI is that if you are tracking the government websites, we knew about this deal days before this press release came out. Okay, I didn't get a chance to share it with you on Stock Talk Live, but we did find out about this through the government public sites, and then knew as soon as the government announced it that VirTra was going to announce it a few days later. They have to. So that was a nice deal. Nice, but keep your pants on, because if we go to ticker.com, I'm not advertising it. I do endorse it, by the way. They don't pay me nothing. I will never take money for anything in the rest of my life. I either do it for free or I don't do it at all. I'm retired. That's what retired means. Okay? And we go to the quarterly results, and what you will find is for this, which was the fourth quarter, ending September, right? The government, fourth quarter, the government just flushes all their extra budget. So they had an extra $5 million to spend, and they said, all right, spend it. And so it wasn't a surprise to me to see this deal come through. But if you look at the results in a typical Q4 for VirTra, 7.5 mil, 7.5 mil. Here was 5 mil back in the past. So, this was nice to see 4.8 million that will feed into the current quarter. It does show that the company is finally getting off the mat. You see, it was operating on basically one or no cylinders for a little while there. Perfect time to buy at the green line. And those of you who did, 362 are already up 67% in 6 months. That's 176% annualized. Just look at the box above my head for proof. There you go. Okay, so that's nice to see. I have a position there, not a huge position, but I was waiting for signs of life. But once those signs of life come, folks, listen. These guys were doing 10 million per quarter. And I believe they're going to get back to 10 million per quarter. I don't know exactly when, but I believe it's going to happen. That's the kind of business this is. In this dip that they've been dealing with, Doge, scrutiny over government spending, blah, 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 right? Funding of police, blah, blah, blah. Speed bump, right? It's a roadblock in the way of this company doing what it can do. I believe it will get back now to doing what it can do. Where's Doge? When's the last time you heard of Doge, right? So this is going to start getting better. And when it does, right, if they get back up to 10 million, if it takes a couple more quarters to happen, look at the comparisons they will have. They'll be comparing 10 million to the 4.7 they did in December of last year. This company will look like it's operating on rocket fuel by comparison. But, let's go to the transcripts. We're probably not going to see those results until April of next year, because that's when they tend to report, late March or early April is when they report their Q4 results. That's what I'm salivating over. I'm salivating over what the comparisons are going to be, how that press release is going to look like when they come out with whatever the number is for the December quarter in late March or early April, and they say, let's say it's 9.4. VirTra reports 9.4 million in revenue versus 4.7 in the year ago quarter, up 100%. That's what I've been waiting for, right? It's still kind of early. We're here only in October. It's going to be May of next year. April of next year, late March, right around here when they actually report that number. At that point, boom, right? Those who are willing to wait and buying now, taking the risk if the market pulls back, you can buy more. Nothing wrong with that. In fact, that's smart. Those who bought at the green line, boom. Okay, this is why I own some of the stock. I want to own more as we get closer to that point. But I would prefer to see more of a market pullback, which we're getting, right? We're getting the market pullback. So it's on these pullbacks. And let's see. And VTSI on a pullback. These are nice points to nibble, collect. Right? You don't want to go and say, well, I want to buy 10,000 shares. Let me just hit the market button. Buy 10,000 shares at the market, and you end up paying a lot more than you would if you just buy 500 at a time. Every time the market drops, 1,000 at a time. Every time the market drops, you won't move the stock. You'll get a better price. Okay? It's a better way of doing things. That's called dollar cost averaging. You've heard of that? If not, look it up on AI. Okay, boom. That takes care of VirTra. If you have any questions, put it in the queue. Oh, and now I have a special surprise for y'all. special surprise. I didn't want to announce it because I wanted to reward those. Oh, look, it's already up on the screen. See this little tab that says new pick? We've got a new pick. We've got a new official pick. It is IZEA. You can see no manipulation. Stock's only up $1 a day. It's been flat for months. You don't see that. A lot of times when people give you a pick, right, it's already skyrocketed and they've got you chasing the stock. I want to make sure we're not chasing the stock. That's part of the reason why I waited so long for this new pick. I told you guys, right? Weeks ago, I've got a new pick coming. I want to make sure that you guys get a good price. This is going to be the latest official pick. We got $3.94 is the price. Lock it in. Let me see. We're going to open up a new, and we're going to talk about it in a second, right? I just want to make sure live on Stock Talk Live. Live on Stock Talk Live. What did I say? 396, 394. Almost shortchanging myself. Initial price 3.94. We'll put it in there. The current price, boom, we got a IZEA. By the way, no losing picks since May of last year, 13 in a row. I think this is going to be 14, and I'm going to tell you why as soon as I finish entering it into the system here. Okay, and we need the Russell 2000. Russell 2000 price 2417.23, and we're going to put that right in there so we can compare our performance on this stock to the Russell. Boom, there we go. 233. Is that the latest price? I don't know. I guess we're not getting the latest price. All right. No, it's not 394 anymore. Okay. Sorry. I guess this isn't updating in real time. That's what happens on the show here. I'm operating in a vacuum. I don't have real-time quotes. We'll pull it up. And then we're going to talk about, and you know what I got to do also? Oh, well, I guess I'll do that afterwards because I don't want to show you that. I got a new article that's going to go out regarding this pick. Okay. What we have now, man, I wish I could show y'all the article that I wrote. Somehow we have to make that happen. Damn. Yeah, IZEA just like you guys shouldn't like right? Like be calm about these things. Now the stock's halted. Hilarious. Well, good. Now you guys can sit down and hear me talk about the company instead of going cuckoo over buying the shares at any price whatsoever. But it is justifiable. In fact, you know what? We can, right, put this article out here. I'm going to tell you up front, I don't always agree with Wall Street. A lot of times I don't. I do my own work. I put together my own price targets. Okay. Oh, but here you go. You've already seen the risk reward chart. Let me put this out here. Okay. And this is what it looks like to me. Okay. You can see it has no bearing on the past chart. Look at that. If we zoom in, here's what it's looked like in its history. Okay. Now, who in their right mind would put these lines here? You see these white lines? You know what the white lines are? They're technical. Okay. But we don't deal with technical analysis, at least not primarily. We deal with fundamental analysis, and so I had put a lot of work, 100 hours of work, into building out this chart so that you guys can use that as a guide as to where this company is and where it can go. All right, I'm going to pull that further back. Boom. All right, that looks good. IZEA. Why a $10 price target? Why do I have $12 up here? Quite simply. First of all, this company trading for $4 has $3 of cash. Okay? Now you might ask yourself, why would a company with $3 of cash and a $4 stock price be only trading for $4? Right? Well, it's simple. Because they were burning that cash. Old management was burning that cash. Okay? By my accounting, they spent tens of millions of dollars. Let me see if I've got access to my draft post. Oh, here we go. Beautiful, beautiful, beautiful. I can publish this now, in fact. Publish. All right. There. Now, if it is published, then it should show up on my website. There we go. Okay. Now you guys can get the whole story yourselves. All right. IZEA's turnaround is creating a risk-reward monster. As of right now, these guys have flipped from spending money, being unprofitable, burning cash. And this is the problem. If you got a company at $3 with $3 of cash, you're like, I'm getting a bargain. Not if they're burning $1 of cash per year, dummy. Because next year they'll only have $2 in cash. The next year they'll only have $1 in cash. The next year they're going to raise more money, which is what IZEA has done in the past, and you're going to get diluted. Because when a company needs more money, that's a bearish raise. As opposed to when a company wants more money because business is booming, that's a bullish raise. For those of you out there that haven't heard this from anybody else, that's because the 10,000 clowns out there are clowns. Everybody thinks, a raise, they did a raise, it's dilution, it's bad. No, it's not. Not necessarily. Usually it is. But if you can pick out the bullish raises, then you can go in and buy a Kraken back here when they did a bullish raise and make money. Okay? These guys were doing bearish raises. Okay? Bearish raise after bearish raise. Losing quarter after losing quarter, and so the cash was dropping. And finally, the board of directors got sick of this and said, you know what, guys? You've been doing this for years, literally years. You've been burning through investor money, and we don't want to do it anymore. Okay? It's time for you guys to start monetizing what you have. Let me see if we can go back a little bit further so we can see more of the history of the stock. Here we go. We'll zoom, right? And you see that turbulence that you've had in the stock traditionally? There you go. That's perfect. That's perfect right there. Okay? Look where the stock has been in the past. $40+ a share. Burned money. Almost went out of business during COVID. Popped back up because that's what everything did in COVID, right? After the COVID crash was the COVID bubble, and then comes right back down. Burning cash. They get rid of old management. They bring in new management. Great new management. Okay? I have spoken to this guy multiple times already. His name is Patrick Venitucci. All right? He is a veteran of this industry. First of all, let me tell you what IZEA does. All right? And why that's so important in this AI era. The company, as you can see on the screen, connects brands with influencers for social media campaigns. All right. What does that mean? Well, obviously, I'll give you an example. F1, the movie, right? They had their red carpet event and they wanted to build a social media buzz around the movie. I talk about this in this article somewhere, right? And so what the maker of the movie, I think is Warner Brothers, who actually uses IZEA for this on all their movies now. They said, IZEA, we need a social media buzz. We don't know how to find the right influencers. We don't know how to contract the right influencers. We don't want to do all that. We don't even have software to track all that stuff. The success of the campaign, blah, 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 blah. Can you do that for us? We know you can because you've done it before. Okay? The CEO says, yes, well, we're going to do it profitably now, from now on. Okay? And what IZEA does is with the tens of millions of dollars that they've spent on acquisitions and software development over the several years in the past, right? And instead of spending more, the new CEO said, hey, let's stop spending and let's start monetizing all this great stuff we have. Okay? And now what they basically are is like a Salesforce.com. Don't get excited. It's not Salesforce.com. It's like a Salesforce.com specifically for managing social media influencer campaigns. They have all the software to manage who they should be going after, how to contract them, how to get them where they're supposed to be, making sure that they did it, seeing what the success was of each individual. There was over 250 of them that crashed the red carpet of event for F1 and built a massive instant social media buzz for what turned out to be, by the way, a great movie. I saw it. Really cool. Okay? And so it helps these, and that doesn't cost them a ton of money. That is a great use of money for Warner Brothers. It's a great ROI on what they're trying to do, which is get as much money back for paying Brad Pitt to be in this movie, right? And IZEA does that. And now with this new CEO in place, and he's been there for a little while now, long enough to get his feet wet, right? He says, what's wrong with these guys? There's no reason why we can't be profitable. And so he said, stop spending on all this stuff. Stop. He got rid of it. Extra people, the extra spending, everything. We're going to start focusing on sales, not R&D. And this is one of my favorite setups. You'll see this in the article multiple times. CTLP. Okay? Boom. R&D cycle complete, monetization mode, back up the truck. This is where we are right now with IZEA. When we did that with these guys, the stock was 3 and they got acquired for 10. Actually 11.20 in process. Okay? Because what's the difference between when you have a company that is losing money, you can't put a PE on it. But when a company is making money, you can put a PE on it. And everybody likes a PE. I don't like PEs, but people like PEs. I like future DCF. I do a DCF on a stock like this when I talk to the CEO and he says, hey, we're going to turn to profitability. We're going to stop spending. We're going to start making money. We're going to monetize our R&D investments like CTLP did. Okay? And then you get a guy like this, John Hickman, who has followed the company for years. Okay? And when I spoke to the CEO, right? He said, Mark, I'm going to tell you right now. I asked him, I was like, hey, Ladenburg, are they just like fluffing you up, or does this guy really know your company? He goes, he really knows the company. And you don't give guidance. How do you feel about the numbers he puts out there? He goes, his numbers were built on the basis of everything I told him about what's going on in the business, and I feel comfortable with it. I'm just not giving guidance on this. Okay? So it validated everything that's going on. And then what did he do? He came out and he showed profitability. What? Mark, why didn't you tell us about that when it happened? Because it was a one-time event. I want to see this replicate. I want to make sure that it's not just a one-time thing. I want to get to know this guy. I want to get to know what John's work is. I want to talk to experts in the industry. I want to figure out how big it is. And obviously it sounds big, right? Social media, campaigns, right? For not just movies, any product. It sounds big, but I want to do my research before putting this name in front of you. And I did my work, and I was able to validate and verify this report right here is legit to me. Okay, I will not say that most of the time. This is a legit article on this company, and look at what the estimates are. This is crazy. This is where it gets crazy, right? Because now you understand a little bit of what they do. You understand why they were losing money before. You understand why the stock was low before. You understand that a company with $3 in cash isn't necessarily worth $3 if they're burning it. But if they are making it, well, then $3 becomes your floor. Because these guys are expected to make 44 cents this year, 62 cents next year. That's $1 total over the course of 2 years. So that means their cash goes from $3 to $4. Well, the stock wasn't even $4 when this show started. This is the floor for the stock if they continue to show profitability. Not only that, the CEO said, what do we need with $3 or $4 of cash if we're profitable? If we're generating 44 or 60 cents of cash, we don't need $3 on the balance sheet. And our stock is stupid cheap. Start buying it back, folks. So they announced a buyback. They've been buying back their shares. Okay? So you got a buyback in place. You got a cash as your backstop on the valuation. And as long as Patrick Venetucci is the CEO, his goal is to not only deliver profitability, but growth. He's bringing in some of his old buddies. from the old companies and say, yo, come here, I'll give you shares, I'll give you options, or you can buy your own. It's stupid cheap. We're going to go and we're going to triple or quadruple the value of this stock. And all you have to do is come here and I will pay you to do sales for my company, but you're also going to get rich on the stock. That's a beautiful combination for a multi-decade expert in sales in this industry that comes in and then instantly just calls up his old customers and say, yo, I'm at a new company and these guys are the bomb. Do business with us from now on. And now you can start to see sales go through the roof. Okay? Let's do the quick math. If you have $3 of cash and you add $1 to it from earnings, that's $4 of cash, right? And you do 62 cents of earnings, up from minus $1, up from 44 cents to 62 cents, and you continue to grow that from there, you're probably, and I hate PE, but just to make it easy for you, you probably are going to get a PE of at least 15, maybe 20, okay? That's not a forward-looking statement, right? My disclaimers and all that. This is all a clown show, but that's my impression. If you take a 15 or a 20 PE on 62 cents, you're talking about $10 to $12 plus the $4 of cash. Okay, that's 14 to 16 bucks. Once they get to this point, so I'm only at this level here, but you see this line keeps going up, so we do eventually get to 16 bucks out in the future on this. We're keeping it kind of conservative now because I want to see how fast they actually can grow. I think 15% is a fair number for growth, and therefore 15 PE is a fair PE to get on that growth. So I'm operating off of 62 cents times a 15 PE times plus the $3 or $4 of cash they're going to have. By the way, it'll be less because they're going to be buying back shares unless the stock starts getting expensive. And if it does, well, guess what? We've got much bigger problems to worry about. All right. So I think what we're dealing with here is exactly what I put in the description of this article, which is a risk reward monster, because we're risking so little. These guys have cash and profitability. So it's very hard. If they maintain profitability with $3 of cash, it should be physically impossible for the stock to go down below 3. So what are you risking? Think about the risk. From 4 to 3, that's $1. But what if it goes from 3 to 13? That's $10. That's a 10 to 1 risk reward ratio. I can't find that anywhere anymore in this market. I was able to find it back when the market was down here, green line on the IWM, right? When the market was crashed. But now that the market is entering what seems like more of potentially a bubble territory, there's more risk out there. And that's the problem. Okay, so this is a name where I believe you can accumulate, be responsible about it, but keep in mind, yeah, man, these guys are buying shares. I've bought a bunch of shares myself, obviously, in all fairness. I can do anything I want with those shares, mind you. But the facts are the facts here. I will answer any questions you have, but in the meantime, there is a lot more information already here for you to read about the story, okay? By the way, they have over 1 million opt-in creators, okay? Those are influencers, people, TikTok, Twitter, etc., people that can help build a buzz. And in this AI world, and this is the connection to AI here, folks, right? It's going to be increasingly easy for social media influencers to create high level content. When you see the trailer for F1, it's like a fireworks display, right? This is beautiful. They spend millions on these commercials. But now in the AI era, you can just ask AI to make you a little video and it does it. In minutes, you have a professional quality, Hollywood quality video that these influencers now have at their disposal. A few years ago, they would have to spend tons of money to get these videos made, right? Look at me on my show, right? If you go to Stock Talk Live, if you go back in the history of my show, what you will find, the next Brady, I hope so. Go New England. Watch. On my live history, we go back far enough. Let's go back far enough. Oh, wow, it's been a while. Oh, here we go. You start to see, right? Look, these used to be my thumbnails. Garbage. I had some AI generated pictures of myself, right? Some bulls. I was using the same picture over and over again. But then AI came to the level where you slowly start to see, look at the quality of these thumbnails now. Because I just come in every week and I say, boom, this is what I want. This is what I want you to make for me, AI. And it makes it. This week, right, we've got the war, the AI war between Trump and Xi, and boom. So I said, make me a picture of Trump and Xi in a boxing match with their trunks displaying their country flag, make them both beat up, but still ready to fight. And that's what it gave me. Took a few iterations, but you know how much it would have cost me to have a graphic designer make this picture for me? Now I can do this in seconds or minutes. And all of a sudden my show looks like this when I'm not even trying. Imagine what a social media influencer can do. And remember a couple weeks ago when I showed you this, right? And even to this day, we continue to have... This isn't what we want. That's not what we want. What's her name? Millie Norwood. All right? If you guys didn't see it, is that... Let's see if I get it right. Is it Millie Norwood? There it is. This is Millie Norwood.
Hi, I'm Millie Norwood. My identical twin sister, Tilly, has been getting a lot of attention
It's Tilly.
as the first AI actor. And that's great for her, and I hope she...
These are AI actresses now being created. Okay? I got it wrong. I said Millie. And guess what? There's a Millie already. This is why Hollywood is up in arms right now, because it is now becoming stupid easy to create content. I already told you a few weeks ago, a movie, AI generated movie coming soon. An AI directed movie coming soon. OpenAI coming out with its own movie soon. Because it's so easy for content to be created. And so content creators, the influencers out there on TikTok, on X, on some of the new platforms you're seeing now, right? Meta just came out with one. OpenAI just came out with Sora 2, right? You want to see Sora 2? Old dogs, new tricks. You guys need to know about these things. Let's see. We're introducing Sora 2. Look at this. These are the posts that you're going to be able to make with Sora 2. Okay? With no help. Oh, look, they're not even...
Head of Sora. I'm Rohan. I lead the Sora
team to sort of collapse. I don't want to hear them talking about this. But what you saw right there was just an example of what you're going to get.
Ready when you are. 3,
There's
2,
the prompt.
1, go! Dude, you alright? I'm good.
This is AI generated. And this is also AI generated. Okay? These are the things you're going to be able to... Look at this. Okay? And now you're going to be able to create your own posts like this. And it's going to be a lot easier for those social media influencers to get more and more attention drawn to what they do, which makes them what? More valuable to companies like Warner Brothers when they come out with movies, to want social media influencers to get that buzz out. And that's where the middleman like IZEA that has the CRM platform, the customer relationship platform for this to make money. All right, let's go to Q&A. It's 3:19. Oh, geez. By the way, I forgot about the notebook. Final little bits. MOB. I met with the CEO. Look, man, he's telling the same story that he was telling me months ago. And he seems to be more focused on his stock price than his business. He's very focused on his business. It's a good business. I told you guys way back here that this was a great value. I didn't make it an official pick. You see the lines that I drew, though. And look what happened. Okay? Those who bought in at 2 Could have rode it all the way to 8. Maybe you still held some, right? But the fact of the matter is, the number one takeaway I got this time around is the stock has run. I didn't get any real rationale for why I should change these lines any. All right. And what I didn't like, the thing I didn't like the most is that he was trying to tell me that his stock should be higher because this other company is trading at 50 times revenue and we're only trading at 25. Are you stupid? Do you think I'm that dumb? Do you take me for a moron? Moron? This is not how we value companies, stupid. No offense. I got a lot of respect for you and your company, but that is not how we value companies. It's not your job to tell me what I should pay for your stock. Your job is to run the company. And he's not doing that. Okay? So congratulations for getting your stock up to 8. Maybe it's deserved. Okay, I don't know because these lines aren't red and green. I haven't been able to do the full research yet, but I got to tell you, when I did the research, I didn't see enough barriers to entry. Okay, a rising tide floats all boats. So having the security software within a drone is important, but they're not the only company that does this. Okay, so there is a limit to what the proper valuation is for a company like this. When it was a 2, I thought it was a great buy because the R&D that they had put in was relatively low to the $2 stock price. Now at $9 a share, not the case. Okay, so I just want to let you guys know that. Not to pour cold water on the stock or the story or anything like that. I'm not bearish. Okay, I'm just telling you, I'm not so excited at these prices. I do not own any shares of the stock anymore. Also, Techagen. Let me check here. What do we got? I do not own shares of this stock anymore either. And I'm sorry that it's down 7% today, but I started to tell you guys, I think last week, that I've been getting conflicting signals from experts in terms of whether they have something special or not. So as I drew these lines and I've been doing my research and doing my research and and even built a model on these guys on what they're capable of doing, which still holds, okay, because those numbers are legit in terms of what they're capable of doing. However, whether or not they actually do it depends on market demand. And here's where the problem comes in, okay? The latest news this week on Techagen is that we are seeing increasing evidence. And by the way, these guys make chillers. So it basically helps to cool a data center facility. All right, and increasingly data centers need to be cooled because these GPUs, NVIDIA GPUs, generate tremendous heat, tremendous amounts of heat. You could like heat cities with the heat coming out of these places, right? And so what you have with Techagen is they make these natural gas chillers, which is, by the way, a small piece of the market. Electric chillers are more prominent. Natural gas chillers less prominent, but I incorporated that into my analysis, right? But here's the problem. Increasingly, I'm seeing that these data center operators and builders are saying, you know what? Instead of cooling the facility, why don't we cool the actual source of the heat, the servers? And yeah, there's liquid cooling and all, but on top of that, you're starting to see these companies submerge the entire server farm in a dielectric fluid, right? And that fluid is what absorbs the heat from the server, which largely obviates the need for a chiller. And this, my friends, makes me afraid that the low momentum that we've seen so far for Techagen, despite their relationship with Vertiv, may continue. Okay? So I'm a little concerned about this. I'm not yet at the expert level yet. I'm still sorting it out. I got some people that are bullish, some people are bearish, like real experts, people who build data centers for a living, decades building data centers, all right? But even they are feeling their way through this because AI data centers is a relatively new thing. Blackwell data centers is a brand new thing. And so that's the issue that we're dealing with. So be careful, folks. In this market, we are in a red alert, not a red alert, I'm sorry, yellow alert territory in the market. We don't want to be dealing with speculative names. We don't want to be dealing with wait time names as much as humanly possible. I've been selling more and more of those names from my portfolio as possible as we move forward. I want to focus on the primo picks, primo risk reward, primo execution, primo cylinders that it's operating under, and primo insulation from a market decline. That's why I've been dealing with these defense stocks, these rare earths. No matter what happens, we're going to need more drones. We're going to need more submarines. We're going to need all that stuff. That's where you get some of the picks that I've been giving you guys, because we need to be insulated and we need to have low risk relative to high reward. All right. Now, on the flip side, the last one I want to tell you about, I am increasingly bullish on this one, Curiosity Stream. And in fact, let me see what we got here. Shoot. Don't go rushing out to buy the stock, but me, I'm going to buy some of the stock right here. Okay? At these levels with the market tanked, stock's down 9%. Why wouldn't I buy a few more shares? Right? A little bit here, a little bit there. And the reason is that we're getting close to the bottom of this technical channel. Few orders. Boom. All right. And this gives you the impetus. We've got a nice move down in the stock. Why is the stock down? Because every stock is down. And by the way, who cares? The stock's down because people are selling. Right? And when people are selling something that's good, I want to be buying. Well, Mark, why don't you open your mouth and tell us why you're buying the stock right now? Simple. All right. What I just showed you, those crazy videos, right, that are being generated by AI. Those are driven by the large language models taking in tons of video content and learning what makes up a good video. What is a Dalmatian? How does a Dalmatian move? What is a ladder? What is water? What is a surfboard? How does somebody do a backflip? So it can learn how to do these things, okay? And in order to do that, these AI companies have to license content from video producers, okay? And this is where Curiosity Stream comes in. I've talked about them in the past. Let me see. I've just placed a whole bunch of... By the way, I don't buy all my shares in one market order. That's dumb. I don't like using limit orders either, right? I'll go and I'll buy 1,000 shares, 1,000 shares, 1,000 shares at a time until I get the shares that I want. So that's what I've been doing right here. I saw the stock was down 9%. Sorry to interrupt the show, but I wanted to buy myself a bunch of more shares of this stock. So boom, all right, 50 racks worth of shares. That's a good little dabble in the middle of the show. Okay, if it goes down lower, I'll buy more and more and more until it gets down to 432, and that's where I really want to back up the truck completely. But 50,000 for now, that's good at the moment to add to my existing position. So with Curiosity Stream, they were one of the early ones. They have their own video content, and they started signing license deals with the large AI companies so that those AI companies can learn how to make video using Curiosity Stream's old videos. Well, through that process, Curiosity Stream learned what the AI companies want, how they want it, the types of contracting and negotiation they'll do, the T's and C's, the lawyering, all that stuff, the whole process. And now, because they know that process, these AI companies said, hey, now that we've done that with you guys, can you go out and find us more? Or it might have been the opposite. Curiosity Stream said, hey, do you want us to go out and find you more? And they said, yeah, please do. Because we don't want to go through that process. We don't want to educate everybody. If you want to do that and make yourself a little money in the process, please do. So now, instead of just being a content company, Curiosity Stream has gotten into the business of being a middleman for content. And what me and some of my experts determined this week is because of what you're seeing now with Sora 2 and other content creations going on, is that they need more and more and more video. You saw these videos aren't perfect. They're eye-catching, but they're not perfect. And if you're going to make a movie, and I know there's like a YouTube video out there, you could probably look it up. It's like AI actor versus a real actor, Okay, and boom, this is perfect. This is the video I watched, and you could see in this short video the difference between an AI actor giving you their performance, and then you could see Brad Pitt giving his Oscar-winning performance in the same scene, and you see the difference in terms of the facial movements, how he interacts, the chemistry with the other actor. It's going to take a while. AI is going to get better at this, but it needs more content, more and more content, more examples of what a good acting scene is for it to learn how to make a good acting scene. And that's where Curiosity Stream still appeals to me at this time. Okay, so that takes care of all my notes for the week. We'll put IZEA on the screen. Hopefully it's trading again. It is trading again. Still nicely within the technical channel, so that's fine. You can see we can have some nice movement in the coming weeks on that one because of the monstrous risk-reward profile that it has. Beautiful. Okay, here we go. If you have any questions, we are going to take them for the next 24 minutes. I will try to be rapid with this. Thank you for the hellos. Thank you for the thumbs ups. Once again, for those of you joining in late, I do this for free. No sponsorships, no advertising, no nothing. I'm here to be the counter, the rebel to the 10,000 clowns out there that are not qualified to be a real stock analyst. I have the credentials, the 30 years of experience documented here, my real name, my real credentials that you can verify, my quotes, okay, my accolades, calling the #1 stock. CNBC named it the most successful technology stock of the year. I was the one that sparked that move by learning about its role in Google Glass, not insider information, investigative journalism. Okay, it's out there on the internet. You can click on all this stuff, and a real-time track record of what I'm doing. Okay, going back to 2014 and before that to Seeking Alpha, where I picked 24 triples in 5 years. Okay, I'm here to help y'all because my mentor made me into this. And now I want to share it with y'all so that you don't get fooled like I did early in my career. So give me that thumbs up. Give me some comments. Give me some questions. Give me a hell yeah. All right, let's get into it. Enough yapping. What do we got? Looking for question marks, folks. If I skip over your question, put it in again. Given that Perplexity Comet browser is now available for free, how much do you think it impacts the value of Opera? Go back and read what I wrote about, told you about Opera, okay? If you're on this show on a weekly basis, the first time I talked about Opera, I told you that having a browser is important for delivery of AI, okay? And Perplexity now is a Comet browser, which means that's one less company to buy Opera. So all else being equal, that is a negative, obviously, because what we're looking at as Opera is a potential buyout candidate, all right? And we got in, we made some nice money. I came back and I was like, hey, we've made some money here. It's not for sure that they're going to be acquired. So, you know, if you make some quick profit, make some quick profit. Notebook, pen, tune in, right? It's only 2 hours a week to get all of this for free. So that's how I feel about it. I'm not in Opera right now. Which platform allows me to buy Gatekeeper? Ask AI. I'm not here for those kinds of questions. I'm here for questions on the stocks that I do to give you my expertise. You can ask AI. Sorry, I'm not trying to be rude or anything. It's a great question. It's just a question that you can just ask AI and you'll get that answer for. I will look at all of the comments after the show. I'm just going to go straight to the questions, by the way. Have you looked at... Bro, why would you ask me, have you looked at? Dude, do not ask me that because you're putting ticker symbols in my chat that are not stocks that I've looked at. All right? I get it. It's a fine, it's a fine question to ask. Have you looked at? Dude, I'm looking at everything. I've got 10,000 followers around the world. Okay? And let me tell you right now, because I'm going to delete this comment right here. All right? I don't want anybody to see that. Because it's low-key pimping your own name or asking me about a name I haven't talked about. Breaking both rules. All right? You're relatively new, but you've commented before, so you should know better, right? 10,000 people always ask me, what about this? Have you looked at that? Have you looked at this? Have you looked at that? Do you think I have time for that? Are you dumb? You stupid? If I looked at one name from 10,000 people, 100 hours per name, do the math, Mark, and then come back and tell me how many hours it would take for me to look at one name from each of you. You think that's cool? It's not cool. And by the way, if you are going to give me a name, I want one thing above all else. I want an independent, third party, multi-decade, industry expert. And I'm not talking about Wall Street. A Morgan Stanley analyst is not an expert on natural gas chillers. I want somebody who works in the industry with natural gas chillers. If you have that information about a company, and the expert has told you this company makes the best XYZ. I've been dealing in this industry for 30 years, and I can tell you from my experience, this is the best. This is the bomb. CXDO, perfect example. You can go out on the internet and find G2, Forrester Wave. Those are industry experts declaring that this is the best name in their particular space. And we make money on the best names. Those are the companies that I will spend my time looking into for you. But you have to bring me that quality of lead. Did you get ABC? Shut up. Mark, curious how probability and EPS estimates impact your risk reward lines. Are there other fundamental factors that you use for valuation? Yeah, Baldwin, at the end of the day, when I do a fundamental analysis of a company, I want to assess where the company will be in the future if they execute on all 10 cylinders. So we need the total available market, the TAM. How big a market are they in? What market share will they get within that market? What is their position with that market? An entire SWOT analysis, an entire operating leverage analysis, right? Basically everything. At the end of the day, these lines look so simple, but they are the most complex thing that you will ever see because it incorporates everything that I can imagine happening to this company based on 100+ hours of research into what the company does, including what I expect their growth rate to be, which is what goes into the slope of the line. So there's a valuation in the future, let's say $20, and there's a slope to the line, in this case, 11.6% annualized, and this line grows at 11.6% per year, getting to $20 a share if these guys reach their full potential. Okay, maybe they will, maybe they won't, but as you can see, time after time after time, right? Most of the time recently, these companies do start operating on 10 cylinders and reach that potential, as Air did back here after, look at that. I named a buyback here, but the green line was up here, right? That was yet another tremendous risk reward opportunity because I believed that the stock had no business being here under any circumstances, right? And therefore the green line was drawn here, and boom, you see what happens eventually, right? And in fact, by the way, the red line was down here originally, but then AI came along and I had to move it up because I didn't imagine AI and what it would become, and once it came along and boom, changed everything. Nobody, even OpenAI, did not expect ChatGPT 3 to perform like it did. It was a surprise to the industry as a whole. We had to rethink what's going to happen to these companies in the future. And as a result, I no longer think that Air's potential is a mere $35. I think it's more like $65 because of AI. So yes, everything goes into these risk reward lines. Write it down, please, because I answer this question often, y'all. And that's why these lines don't change very much, because there's not a lot of alteration. Once you do 100, 200, 300 hours of research into a company, what's an extra hour or two of research going to do incrementally to make me want to shift these lines? Not much. LPTH, you had a question mark. What's your question, bro? If Gatekeeper's new investor presentation is a sign that they're getting ready to talk to more institutional investors, does it mean there's a good chance dilution is coming? No, MBJ. No, they don't need cash. Okay? And if they need cash, it's only going to be because they got so many more orders that they're like, oh my God, we're going to make so much money, but we need another 5 mil to buy more cameras, more equipment, more people. That's called a bullish raise. So who cares if they do another raise, MBJ? Where's your notebook and pen, bro? You've been on this show for months. Who cares if they're going to do a raise? I don't think they are. But if they do, who cares? It will be bullish because they don't need the money. Thanks for the bonus episode this week. Can you talk about stop loss setting strategies? No, ask AI. Is there a difference when it comes to volatile small caps versus large caps? Only it's our advantage. It's our advantage. The volatility in small cap stocks is to our advantage because when you get a name like Kraken, highly volatile by the way, right? Look at the volatility in the stock on the way up. Like a move from here to here represented a 15% move. From here to here, 32% drop in the stock. And just that little move right there, that's 32%. That's a lot of volatility. We get paid for volatility, especially when we have these lines to use this as guides, right? Because when I said buy, like I did with IZEA today, I made sure that it was close to the low technical line, also low in the risk reward line, so you can have a nice run up to the tops of the risk reward lines, take some profits, and when it drops down to the risk reward to the technical lines again, you can buy more and go for the ride. And God love you if you keep going past, because I called it a sell at 2. Because to me, the risk reward had played itself out relative to my analysis. Well, guess what? Money Mark's analysis was wrong. 2 wasn't the limit. Apparently, it was over 4. 4, almost $5 the stock got to. So you see, I'm not here to pump stocks. If I was here to pump stocks, I would say this stock's going to 10, right? Cormark said it's going to 10 by 2030. Why shouldn't Money Mark? Because I want to protect your money. I want to protect my reputation. So when I say a stock is a buy at 67 cents and it triples to $2, that's good enough. Okay? And if it goes to $4 or $5, God love the people who stayed in the stock. I wish you well. I'm happy for you. Legit. I'm happy for every MFer out there that has made money on this stock at any level. Okay? I want to see y'all succeed. That's the only reason I'm here. But I'm not going to go and lie to myself and you by saying, well, let me just raise the lines for no reason. I saw no reason to raise the lines, and I still don't. Why? Probably because maybe I just don't have enough expertise to determine why the stock should go to $4 or $5. As it has. And I'm not saying it's not justified because I can imagine and envision it, but I just can't really quantify it. And therefore, I needed to stop it where I stopped it. But that's how we do things around here. In small cap stocks versus large cap stocks, you're going to have less competition. There weren't 50 institutions drawing this chart or making price targets when I said to buy. Now you see more and more companies. The bigger a company gets, the more likely it is the Wall Street firm is going to initiate coverage. That's the opposite with me. It's more likely that I will de-initiate coverage the higher a stock goes. Because then Wall Street comes in the competition, and I don't want to compete against Wall Street. It's easier to make 40 or 50% a year, 250 this year, if you're not competing with Wall Street. Stay away from Wall Street. They're good competitors. There's a lot of clowns out there, but they were taught pretty well. Is Meet Kevin a good guy in the investor space? How do I know, Max? I don't. 3 rules: real name, real credentials, real-time analysis of their picks. Dude, I mean, I'm not going to do this work. The whole reason I give that speech every week is so you are armed to get that answer yourself. Are you thick? Are you dumb? I'm sorry, I'm not going to give you the dummy treatment because it's the first time you're asking a question on the show. So I'll take that all back. But when you look, do me a favor, look through this credential list of mine and make sure that anybody you listen to can at least match this. Okay? It's not to pat myself on the back. I was blessed. I was really freaking lucky to get this job at IDC. Really lucky. I fell into it. Okay? But then I took that and I ran with it. I paid attention. I learned. And after 30 years of busting my butt to learn, I became who I am today. That's not something to pat myself on the back over. It's something for me to thank God for. Okay? But you got to do your part. Is it possible that the $51 million share dilution that was used for capital investment, was that used for profits? I don't know what stock you're talking about. I think on your risk reward chart for Gatekeeper, your red line has a second red line above on your video for Tuesday. Is there a new top line for Gatekeeper? I hope you were paying attention, listening, taking notes on the show. This line shouldn't be that far up. Should be like something like that. All right. These are multiple possibilities. Okay. What I've been saying is, in light of what we've seen here, okay, unprecedented demand for drone protection. Drone Shield goes through the top of my risk reward lines. Unprecedented demand for autonomous vehicle batteries. Kraken goes right through my risk reward lines. Unprecedented demand for data centers. TSSI goes straight through my risk reward lines. That we're dealing with an environment of extraordinary demand, and Gatekeeper is in that demand sphere right now, because for the next 2 years they are going to be processing a mountain of orders based on government mandates, okay, that expire in October 2027. So for the next 2 years, these guys are going to be flat out. And investors may get way more excited than my risk reward line will justify, and therefore it can just go straight through, what is it, $5 here, right? That's the $5 target. So we're at 2, 5, it could go straight, it could go to 10, okay? I've talked to my mentor about this and gotten a feel for how much money they could generate over the next couple of years and what that might make investors do to the stock. And I want to be mindful of that, because as we get to the top lines, do I want to take profits? Do I want to hold? How much do I want to hold, etc., right? So I don't miss out on the next name where I got out of Drone Shield at 227 and it went 91% up from my sell price. That I got out of Kraken at 2 and it went up 120%. Same with TSSI. I got out of 20 and it went up 50% to 30 from there. I missed on a lot of low-hanging fruit because I wasn't giving enough credence to the fact that these companies have extraordinary short-term demand that's going to make investors think that this is the norm versus something that's in a bubble happening only for a few years. Well, for the next few years, that's fine. Because in the internet bubble, this is what happened. A similar break. You see that with Kraken, Drone Shield, TSSI. The same thing happened to the whole market in 1999. The NASDAQ went up 100% in 1 year. 185, I'm sorry. What's 85% amongst friends? Okay? It went it went up 180, it went at 185% above my risk reward red line. Okay? You would have been like, Mark, you're an idiot. You don't know how to draw these lines at all. Well, yeah, I did, because it actually came right back down and never reached it again. It was an extraordinary circumstances of incredible demand that is something that is nearly unprecedented. And in fact, it took 25 years for us to get to the point where we're seeing something like this happening once again. Okay? So, as a result, we want to keep that in mind with a Gatekeeper, that we could see that kind of movement happen and make it go far beyond my math. All right, let's keep going. We only have 6 minutes left, so I'm going to go into rocket mode. What platform do you suggest? Ask AI. Do you have 2 hard buckets? What's a 2 hard bucket? Yeah, I mean, dude, if I can't get like the most perfect information short of insider information, I want all the information short of insider information. I want independent third-party experts giving me information. I want to feel so comfortable with the pick that I can't lose. I do not want to be embarrassed in front of y'all. I do not want to lose the streak. Okay, it's going to happen at some point. Everybody gets losers. I've had plenty in the past, but I want my reputation to be solidified with y'all. I want perfection. And so, yeah, if I can't get perfection, that's too hard. Newbie here, if I missed buying at the green line, you recommend buying up into... Watch my videos, read my article. Don't ask me that question until you've done your own homework. I do this for you. I did this for you. Go, read, and watch this so you can learn, and then you can come back and ask questions if something didn't make sense. Welcome, by the way, newbie. I'm not going to yell at you. I know my tone is a little terse, but a couple people got me a little pissed off. Being dummies. Looking for question marks. We got 5 minutes left. Are you familiar with the largest shareholder of IZEA GP Investments? Do you check the proxy for alignment compensation information? I don't care about all that. I care about the value of the company. What the F do I care who else owns the stock? I don't. I don't. You had said Tuesday you talked more about Sinestech. On Friday, did you close your position in Sinestech? No, I did, and then I reopened it. Right, the shares that I sold, I ended up buying back because of my mea culpa on Tuesday. So go back to my video on Tuesday. Look, see, I told you I make mistakes. I made a mistake, and I owned up to it in my surprise video. So go watch the surprise video, and then obviously, if I thought something and made a move on what I thought, but what I thought was wrong, then I reversed the move. Okay. That's what you do. That's one of the rules, by the way. Put in your notebook. When you make a mistake, immediately rectify it and reverse it. Right? If I think a stock is worth 10 and it's going for 1 and I back up the truck and then I say, you know what? I think it's only worth 50 cents and I sell the whole stock and then I realize I was wrong. I was wrong. What I was thinking that will make the stock go down to 50 cents is wrong. I'm going to immediately buy it back. Okay? I'm going to reverse the mistake. A lot of you guys won't do that. Oh, I'm not going to reverse the mistake. Why wouldn't you reverse the mistake? Are you aware that Gatekeeper is already spec'd on 200 rail cars for SEPTA through Hitachi? Yes. And Hitachi is another major train company. What do you think? But thank you for bringing that up. Yes. Let's see. How many deals can Curiosity really broker? Why would any big platform need them? The big platforms wouldn't need them, but do you know how much content there is out there? I have video content. You have video content. Everybody has video content. There are a ton. And bro, the answer to your question is pretty simple because I wouldn't have drawn these lines and don't let those go into infinity, right? We haven't drawn the risk reward lines yet, but I wouldn't be buying the stock if I didn't think there was plenty of business for them to go after. So that should be fairly obvious to you. 3 minutes left. What is the reason for... It's a good question, by the way. There's nothing wrong with that question at all. Again, I'm fired up. What's the reason for Curiosity Stream not being an official or unofficial pick? Nick, you know the answer to that question. It's not a 10 yet. I don't have all the information to draw the risk-reward lines. Okay? You have to be a 10 out of 10 for it to make be an official pick. Okay? I don't make official picks, but what? 1 per month on average. Sometimes none for months. I want to be super picky in the official portfolio. And you can't ask me what's missing because I'm not going to tell you until it's no longer missing. Because I don't want you to have the leg up. I don't want you to see what's missing, find out that it's not missing, and then buy the stock before I can and tell everybody else. Right? Good try. I dig it. Right? But I want to be fair to everybody. IDN chart. We got a request for the IDN chart. There you go. That looks nice, right? In your discussion with SNES, did he explain why the increased shelves, if he has no plan? Yes, that's a great question. That's a phenomenal question, okay? So there's some technical lines on SNES, okay? If you go to the reason there's the blue line there, we might go over a little bit today, just for y'all. That blue line is an extension of the 200-day moving average. I like to build future. Like, what's the 200 moving average going to look like in the future? That way I know how low the stock can go in the future. Everybody deals with the current, 200-day moving average. I want the future 200-day moving average. And you can calculate that because you go back 200 days and you make some assumptions around current pricing, and these prices are going to drop out of the moving average, and these prices are going to get moved into the moving average, and the moving average is going to move up because these prices are going to move out of the moving average. Hope that makes sense. If not, play it back slow and then throw it into AI and say, what the F does this mean? And it will explain it to you. Okay. If they have the opportunity, this is what the CFO told me, if they have the opportunity where the stock is spiking in value and spiking in volume, and they see the opportunity out there to take advantage of money that they can raise. They're not going to raise for the sake of raising, but if there's an opportunity in their business that can be gone after by raising a little bit more money, they want to have that shelf out there to do that. Okay. So far, they've been truthful. Okay. I called them liars last week, but I apologize for that. All right. I misconstrued something. Happens. We fixed it quick, and I'm back in here as a speculative name, right? Which is, by the way, against the rules right now. We shouldn't have speculative names in our portfolio, but this is very compelling. So we're going to check it out for a little bit. I'll put a little piece in there. Good question. Great question, in fact. That was the question of the week so far. Mark, do you think now is the time to take profits in a portfolio and build cash? Watch my video, read my article. Okay? You haven't done that. Otherwise, you would know. Come back next week, ask me the same question, except say, I watched your video, I read your article, I understand that X, Y, and Z, but specifically A, B, C, question mark. You haven't done your homework. Mark, are you familiar with, I already did. As Gatekeeper ramp up, will its supplies be able to keep pace? Yes, I already said that. Can you show the linear arithmetic chart for Gatekeeper PRF? That's a good question. There's your arithmetic chart on GKPRF. Big difference, right? The risk reward chart for Crescendo, I already showed it. There's Max asking that dumb question again. Why would you ask it twice? I didn't skip over it the first time. No offense, Max. This is the first time I'm seeing you, so just know that we got to entertain people. So I have the dummy treatment. Not everybody loves it, but most of y'all love it, right? It's just all for entertainment. In fact, some people actually will ask a dumb question to get my reaction to them. Don't do that. Don't do that. I'm going to be legitimate when I see a dumb question. It's going to be so everybody else can learn how to do things the right way. And the dummy treatment actually is effective in letting everybody understand how something is supposed to be done. Okay? So if you go back and watch this video, Make Millions with Mark, and read this article, and then go back and watch my show again, this show, the macro part of the show, I guarantee to understand the answer to your question much greater than you do right now. Okay? Because it is a very simple answer. But I'm not going to give it to you because you haven't done your homework. I know you haven't. Fakir. Bye-bye. I'm sorry that you are, that your mommy and daddy didn't give you, mommy and daddy didn't give you love. I'm sorry that mommy and daddy didn't give you love. But that's not my problem. Okay? Let's see. I don't know. We're going to report you. Okay? You're gone. Bye-bye. Yeah, man. And what are you doing? You're so stupid. That was the last question in here. You're so stupid. Such an idiot that you have nothing better to do with your life. Your poor, sad life. You're watching me. You are watching me with your precious time. I would never do that. I would never watch you. I would never watch a pump. right? Why would I do that? That's a waste of time. It's not entertaining. It's not informative. It's not nothing. It doesn't do anything, right? And you poor jealous soul, that I have 10,000 followers out here, that I have nothing but winners over the last 13 months, that I have a 30-year or illustrious career. And you poor boy, that mommy didn't give you enough love, and you get joy out of making somebody mad. Are you happy that you're getting attention right now that mommy didn't give you, didn't let you take milk from her bosom? Oh, you poor little boy. But congratulations, you got attention now, okay? But you're not making any money because you think I'm a pump. You're not going to buy my stock, so you didn't do anything good with your time, which is why you're a loser. Bye-bye. And with that, y'all, 4 o'clock, we're going to put this back on logarithmic. Another big week. I'm glad y'all tuned in because that's the reward you get. You get all the information for everybody else. You get the real deal, Holyfield. I hope you enjoyed it as always. I hope you'll come back this time. Hey, if you forgot, give me the thumbs up. Okay, I appreciate it. I want to appreciate y'all who reported this dummy's negative comments, because we're not here for that. We're here for professionalism. The professionalism that made me a millionaire. The professionalism that's got me now making millions per year. The professionalism and the blessing to be able to come here and share that, because I do love, look at my hair already standing on end, the stories that I'm getting from y'all. I'm getting more and more. Mark, you made me a millionaire. Mark, I just made my first $500,000. I'm getting like more and more and more of those stories, and I love them. Okay, and I love y'all, even though a lot of y'all are dummies. Next Friday, Money Mark, Stock Talk Live. Catch y'all then. Take care. Ch-ch-ch-ch.